Hi everyone, welcome to this another video in Market Tech YouTube channel. So today I got some interesting video for you, which is going to be exciting also. And you might think you saw a thumbnail that making some swing trading strategy, we're getting some 40% return. So we're going to see how it's possible in this video. So I just want to bring to your notice about the quote from this Peter Lynch telling that most investors should be better off in index fund. And even for Warren Buffett also, he has mentioned about this, that periodically investing in index fund, the nothing investors can actually outperform most investment professionals. So most of them have conveyed that it is very always best to invest in the index funds and you can make better return. And also Warren Buffett has told that nobody can beat an index fund in the long term. Now we are going to see a strategy where we are using the index and going to make return better than the index. That's what we are going to see. And the backtest of last 1 year basis I am going to show also. So for this, what are things we have to see? Now we have taken the Nifty index for this purpose. Nifty index is the main index for India. So we are going to take Nifty index. So the Nifty index, if you see, what's the performance, what we'll first take note. From 1st January to 31st December, now this is the return what we got. So from 14,000 we got to 17,000 and we made 23% return, 22.8% exactly. 23% return we made in the last 1 year, starting from 1st January to 31st December. And maybe you can invest in the Nifty ETF and you would have got this return actually. Now, how we can make better return than this and do some swing trading also and beat the index actually. I'm sure this is possible and the return is going to be good actually in the several years in the past also possible, but you can do the backtesting for your own and do this also. So what is the first step? So there are some rules I just made actually. You have to see the rules one by one and follow that. So I just made some file actually which is going to help us. Now first I just downloaded the data for this December data. All this data end of month actually. So if you see here end of the month, all the data for Nifty 50 stocks I have taken actually. Now if you see here, you can see for every month there is one date is there. Also maybe like just put here what are dates I just mentioned here. And then I just return rows, come on, this it. So this is the list of dates which I considered. The dates, end of the month dates I considered. So based on 31st December, what are values are there, we'll compare with the 20th January value and then we'll make the best stock and then you invest in that. So first rule we'll see here, select the top 5 best performing and worst performing stock based on the month end prices. This is the first step what you have to do. And then here what we'll do here. So based on the data what I have downloaded here, I just plotted all the data here for Nifty 50 stocks. I'm just not concerned about the stocks moving out, in and out and for practical purposes, for backtesting purpose. Now here if you see here, I have taken the stocks of Nifty 50 stocks as of date whatever is there, and then I have taken for entire full year the same stock only. Now for the full 12 months you can see the data here. This is the prices, closing price as of particular closing date only. We're not bothered about during the month high, low, whatever is there. We're just ignoring that and we take the closing price only. After that, what we're doing here is we are taking what is the return this stock has given for a month. We just see here. So this stock Adani Ports has what return as of 20th January over 31st December 2020. So it has given 6.808%, then 31% return we got and so on. So this is the way how we got actually month on month what is the return each and every stock is giving. And then what I'm doing is here I'm taking the best 5 stocks. Here what I'm doing, I give the ranking for this and then the 5 stocks I'm selecting here. So you can see highlighted the first 5 stocks whatever is there I mentioned here, and we are selecting only the 5 stocks for investment purpose. Similarly, the bottom, if you see, we are taking the worst 5 performing stocks. This is the worst return. If you see here, the number 1 is coming is Kotak Bank in the month of January as compared to December closing, 14% down it was. So this stock was the worst performing stock, and the next performing stock will be Asian Paint, 12.6% down, and then the third stock is 11.93 and so on. So the 5 worst performing stocks we are taken here, and similarly this we are doing for each and every month and investing in that stock. The next step is we are taking the what number of shares to be invested here. So for this what I have done is I just made 2 conditions here. One is you should not invest in share which is more than 20,000 rupees. If it is coming the top 5, the 20,000 shares, what are the shares? For example, the Bajaj Finserv, which is crossed 20,000 rupees, not 20,000, this Nestle. Nestle crossed 20,000 rupees actually. Here it was around 20,000. No, it is not that. It is not crossed actually. So we are not considering that actually. This one, She Cement, sorry. She Cement was there more than 20,000. So we are just ignoring the stock which is more than 20,000 rupees. And if it's best performing stock, then we'll ignore that and remain invest in the next 4 stocks only. Or if it's the worst performing stock, then here also we will ignore that and invest in the remaining 4 stocks only. And we can go, if you want, we can go for 6 stock and then you can add also. That's fine actually. So here in this purpose, I'm just taking only the 5 stocks and ignoring the shares which are trading more than 20,000 rupees. And here, and each and every stock, you have to invest 8,000 rupees per stock. Per stock, you have, and the top 5 you selected here. For example, if you here selected here the top 5 in the list, well, let me just show you. And the top 5, the coming is Tata Motors actually. Tata Motors is the top 5 stock, and then the number of shares what we're taking is 8,000 divided by number of shares. The share price that time Tata Motors was 262 rupees. So at that time we are going for 30 shares of this Tata Motors. So this is strategy we are using, and the top 5 and bottom 5, best 5 and worst 5. These stocks we are selecting here. And then what we are doing here, next step is buying price. So once we selected the stock, then what we're doing is we are going for the number of shares. Then we take the price of the stock which is going we have to buy, and then we are going for the buying of the stock. And the 8,000 rupees is the value per stock. So you should not go for 9,000, 10,000 something. There is some small information is there. We have to follow that actually. 8,000 is what you have to remember. And then we are seeing the selling price of the prior stock which is selected for buying actually. Now we got selling price, and then what's the profit, number of points gain for the stock we are getting here in the month of March, because you are buying in January and then you are selling in February. Buying in February, selling in the March. This is what we are doing. This is swing trading. So we have to just go and buy on the first of the month. Once we know this calculation is done, everything ready. And then next comes is the gain, number of shares what we are buying, and then what's the gain we are making, and that's the multiplication we are doing here, and then we are getting the profit what we are making per stock actually. So this way you're doing the process, and the profit what we are getting in the top 5 stocks is 12,800 rupees, and then here what we are doing here is 15,000 rupees for the worst performing stock actually. So in this case, if you see here, the total profit what we're making is here, in this case just making the total return investment. The total investment return here is 1,500 plus 1,238. This is for the investment of 80,000 rupees what we are doing here. The investment what we are doing here is 80,000 rupees for top 5 stocks, which is 40,000 rupees, and the bottom 5 stocks 40,000 rupees. Total 80,000 rupees is what we are investment we are doing here. And then the total profit we are getting for the first month is 2,797 rupees, which is 3.5% return on the investment for 1 month. And now, and in the same way process you are doing here, if you see here, next month we are not making, just making 0.2% return, and then after that you are seeing double the profit you are getting here. So you should continue the same process month on month. For example, if you see the second month itself you're making no profit, then you just exit your strategy. Then you miss out this next profit. What are you seeing? Double the profit. What are missed here, and the profit for the month you are getting next month itself. And 1 month is small, and then again you are getting a very good return. So this process you have to follow for getting the best return. So the profit what you're making here is 37% for 80,000 rupees what you're investing every month on month. So you are investing 8,000 rupees in per stock, and then you are investing in the total 5 stock, top 5, bottom 5 stocks here. So since you are ignoring some stock which are valuing more than 20,000, that will not coming actually. And this is a total investment what you're doing here. If you see here, 10,000 is what you're investing here. And sometimes what happens is the value is less, number of shares is less, around plus or minus 8,000. So in 5 stocks, 40,000 rupees is investing, and then your 8,000 per stock, and then 40,000. Second bottom 5 you're taking for another 40,000. So total 80,000 rupees what investment you're doing here. Now why not 9,000? Why not 10,000? That's the question can be for many people. So for that I just made some simulation. So what we are doing here is taking 5,000 rupees, 6,000 per stock investment, and then up to 15,000 are taken here. And then what is the amount of stock we have to ignore here? The value of per stock which I have to ignore. This is a table I made here, and then I just made a simulation. What's maximum return we can get here? In this process, we are getting the maximum return 36.96, 37% return we are getting here at 8,000 rupees. If you are investing, filtering based on 9,000 rupees, then you are going to make 34% return only. The profit maximization is at 8,000 rupees. So this is based on the numbers you are getting here. It's not that I am inventing something. All the data based on the what is available share price for the year of 2021. So maybe 2020 also, maybe you can try that and I will see something, and if possible I'll just try to make another video for 2020, do some testing. It'll take some time. Since our set is ready, everything, I can do the same process, just replace the data for 2020 and I can do the for 2020 also. But for 2021 basis, 37% is the maximum return you can get with 8,000 rupees investment. But at the same time, I'll just show you, if it is making 16,000 rupees, that investment return you will not get here. For that, what you should do, I just put here 8,000. Just remember 36.96% return and just put in multiples of 8,000. If you see here, if you put multiples of 16,000, the profit return is coming to 34% only. Now you are getting 37% in 8,000, but you might ask why the same amount of doubling, why not 34% is only is coming, 37% is not coming. So that's a small thing you have to note. So for the purpose of calculating the number of shares, you should take 8,000 rupees and divide that value with the number of shares and then multiply the number of shares into 2, into 3, like that you should. Not multiply the number of value. It's not that you have to invest, ready to invest say 16,000 rupees, you should not divide 16,000 divided by number of the same. You should divide the number of shares by 8,000 and then multiply by 2. Okay, that's the way you have to do actually. So let me just do 5,000. And then here, because of that calculation of rounding of number of shares, this issue will come actually. So I just again put this 6,000. Now 15,000. Let me just type 15,000 here and then see what does the simulation comes here. If you see, at 22,000 is about 34.42% we are getting here. Okay, so the best return what we are getting is 8,000 in the modules. So now we are going for 8,000 rupees investment per stock, and then you ignore the stock which is priced more than 20,000 rupees, and that you get maximum return. Now, one more question you might ask is here, I am getting here 50,000 rupees investment, 3,000 rupees more investment return. So we can do the maximizing return. So in this case here, what I've done here, I just made one more analysis. Only if you go for investment in the bottom 5 stocks. So in the bottom 5 stocks only if you're investing here, so you're getting good returns, and what will be the best return you're getting here. And let me just try the same thing here. I just take only bottom 5 stocks here. In this case, you're getting at 8,000 rupees, you're getting 40.7% here. In this case, what we saw here, 36 point, let me just put here 8,000 rupees. Now 37% return you're getting here if you're investing both in the top 5, bottom 5. But in this case, when you invest only the bottom 5 stocks, then you're getting 3% more return. You're almost getting double the index return. In index get 23% and we are getting here 40.7%. So in this case, you can just think whether you want to go for bottom 5 only or you want to go for top 5, bottom 5, both you want to go. So next rule is that your 8,000 is what you invest in 8,000 per stock. And then here you can ignore stocks that are priced more than 20,000 rupees, and you can go for investing in the top 5, bottom 5, both the stocks. And if you go for the only bottom 5 stocks, then the risk of the stock moving out of index is very high. Then the return can come down possibly. So because of 3% return, you don't deviate from that. Possibly you can get better returns in the best performing stocks here. So this is the total scenario of how to do this investment based on swing trading. And it's a very simple strategy. If any question is there, maybe I will just try to explain to somebody. Okay, if there is no questions, then we'll just move on. And then bottom 5. So this file is available to the gold members actually in the Excel tools folder actually. So I'll just save that in the folder and they can see that Excel file and just have some more data, and then they can use for 2020 backtesting also. They can do it actually. So hope you like this video and enjoy it, and try to improve your investing with who are working professionals, and they can make some good returns. Thank you so much. Bye.